Is the Phoenix housing market on the verge of a big crash at the end of 2024, entering 2025? Or are we going to see prices surge into the future? I'm going to answer that question for you guys in this video using data on the Phoenix, Arizona housing market. And the first thing we're noticing in Phoenix, everyone, as we look at all the different zip codes, is a big spike in inventory across a lot of different neighborhoods. These areas in red in Phoenix are showing massive spikes in supply, with the number of homes for sale reaching the highest level in at least 7 years. And that supply spike, which I'm sure many of you in Phoenix are noticing, is the signal of a softening housing market. Simply, there's more sellers coming to the market than there are buyers, which is now causing prices to drop in many parts of Phoenix. For instance, you can see that data on Reventure App from Zillow shows that the typical home value in Phoenix went down 0.2% on a month-over-month basis between August and September. Additionally, in nearby Payson, values went down by 0.36%. If we break it out in the county view, we can also see Pinal County had a bigger decline than Maricopa County, but in general, values are going down across most of southern Arizona. And we're seeing a lot of listings like this, everyone. Listings that people bought at the peak of the bubble in 2021, 2022, and are now starting to offload. This is a 3-bed, 2-bath. It's an 85008, which is kind of on the border between Scottsdale and downtown Phoenix. So this is kind of a zip code in a neighborhood which parts of it are gentrifying, parts of it are nice, other parts aren't so nice. Well, you can see it's been on the market 112 days, and the owner has cut the price from 800 grand down to 690,000. So this is a $110,000 price cut, and this value now is starting to get closer to what the owner bought it for in September 2021. So the owner bought it for 635,000. It's now listed for 690,000. And so this is kind of a good example of what we're seeing across much of Phoenix and Arizona, is sellers who are cutting the price, and in some cases cutting the prices by a lot. However, the values are still higher than they were when these owners bought in 2021 or 2022. And it's a situation which is causing almost a standoff in the Phoenix housing market, where the sellers are saying, no, I don't want to cut the price below what I bought it for. But the buyers are saying, well, we don't have the money to still pay those prices with mortgage rates at 6.5%. And what scares me a bit about Phoenix and Arizona in general, everyone, is how overvalued home prices are. So you can see in Maricopa County, data on Reventure App shows the typical value of a house is 21% overvalued compared to long-term norms. In Pinal County, it's 23% overvalued. Up in Flagstaff, it's 33% overvalued. So we have heavily overvalued prices all across the metro. And the way to think about these overvaluation rates, as you can see the historical home price trends in Phoenix going back 25 years, is how the typical price compares to the fair home value compared to income. And so this gray line shows the fair home price in the metro compared to income. And what you can see here in Phoenix today in Maricopa County is the typical value is $470,000. The fair home value is $386,000 based off how much money people make, the median income in the area. So you can see the fair home value has gone up. The incomes in Phoenix have gone up, but the prices went up faster, indicating that there's downside. However, take a look at what happened in Phoenix from 2008 all the way to 2018. Over 10 years here, the fair home value relative to income was higher than the actual home value, meaning that prices in Phoenix were actually undervalued from 2008 to 2018. So if you're a buyer investor kind of wanting to get in at a good time, you want to buy when prices are undervalued or fairly valued. You want to be more careful buying in today's market where prices are heavily overvalued. Now, I know what some of you are thinking. All right, Nick, home prices are overvalued. I know that. When are they going to drop to a point when they're not overvalued? When are they going to go down by 10, 20, 30% and get to a level that's more fundamentally supported by local demographics and where I can actually afford the mortgage payment? Well, I think the answer to that question in Phoenix depends a lot on your city and your neighborhood within the metro. Because we're seeing kind of a bifurcation of the Phoenix housing market right now, where some parts of the metro are still tight, are still holding on. There might even be some bidding wars in some parts of the metro, but in other parts, there's a huge sell-off occurring, inventory spiking, and prices are dropping. And I would recommend at the end of this video that you guys access this data for yourself on Reventure App, because knowledge is power in this housing market, everyone. You're going to want to understand these trends. But really what we're seeing here, if we look at the monthly change in home values across Phoenix at a zip code level, the areas in blue have declining prices. So we have declining prices in most of Phoenix here with the home value growth month over month data point on Reventure App. However, there's some interesting exceptions. Paradise Valley, everyone, and Camelback East actually have values still going up. So Paradise Valley is kind of the ritzy part of Phoenix. The typical home value is $3 million. This is the Beverly Hills of Phoenix. Prices are still going up in these areas where a lot of the wealthy people are buying, often maybe with cash. But folks, in a lot of these more densely populated zip codes, values are going down 0.3, 0.4% a month. And the reason they're going down, everyone, back to the initial point, is the inventory situation. We're now in an inventory surplus in a lot of these markets. So if we're in an inventory surplus, that means excess supply, prices are likely to drop. And one such market, everyone, where prices are now dropping due to excess supply is Laveen, which is to the southwest of downtown Phoenix. Take a look at this listing, everyone. It's a 4-bed, 3-bath, a property that it's now selling for $345,173 a foot. If you go back here into the listing history, you can tell the current owner bought this property in September 2022 for $431,000 and is now selling it for $345,000. So what's that, everyone? The current owner is taking a 20% loss. They are cutting the price $85,000 on this listing in Laveen. And so we are actually starting to see more of this occur in some of these zip codes in Phoenix where there's an inventory surplus. So in Laveen, inventory is up 54% from long-term norms. So we're seeing more listings like that, where if the owners are forced to sell, maybe they defaulted on their mortgage, maybe they get called back into the office, they got to go back to California, they're selling and they're just selling at a loss because the inventory and supply is so high, they have to do it. And at this point, everyone, I just want to gently remind you of what happened in Phoenix 15 years ago during the last housing downturn. Because I think history, while it doesn't necessarily repeat itself exactly, it can be a useful guide about maybe what can happen in the future or just setting expectations for volatility. Because Phoenix and Arizona in general is a very volatile housing market historically. It booms and it busts, right? It has the big influx of people, all the home building, the investors come in, and then everything kind of leaves at once and prices drop historically. And in the last downturn, home values in Phoenix dropped by 50%. 50%. Let me just show you that data so you can see. Actually, we'll look at it by zip code, everyone. In the last downturn, you could see percent crash from 07 to 2012 here on Reventure App. Basically, the whole west, center, and south side of the metro, values dropped anywhere from 50 to 70%. Like in Tolleson, values went down 66%. In Mesa, they went down 63%. Even in Paradise Valley, they went down 43%. And so just get a sense of how much values dropped in this last downturn across Phoenix. It was huge. Now, I don't necessarily think we're going to see the same level of price declines in this downturn, but I think it's very realistic that we see a correction. Given the exploding supply, given the fact that prices are 22-23% overvalued across the metro, and the fact that investors are now starting to sell, and you're seeing more and more examples of people taking losses, it's realistic to think that over the next year or two, there will be a correction in Phoenix, particularly in the zip codes that are most exposed due to skyrocketing supply. So if you're a buyer and investor, understand that, bake that into your expectations so you can make a more informed decision about where and when to buy. And to do that, go to www.reventure.app and start by looking at the trends at the metro level across Arizona. Take a look at how overvalued prices are, and then take a look at the inventory surplus or deficit so you could see how high or low supply is today. And then start zooming in to the zip code level so you can get a sense of the bifurcation in the market. Again, in Phoenix, like inventory is low in Biltmore, Paradise Valley, and Tempe. Inventory is still down from long-term norms. But then in all these areas to the west, Glendale, Peoria, Surprise, down to Laveen, inventory is way up. Inventory is now even up in Gilbert, everyone. Gilbert was a really desirable area during the pandemic. Lots of people moved in. Well, now the supply is up in Gilbert, indicating potential downward price pressure. So do your research on your zip code on Reventure App, www.reventure.app. You're not going to want to make a real estate decision without knowing this data. So go to www.reventure.app right now, sign up for an account. In particular, I would encourage you guys to do the monthly pass. If you're someone who's looking to buy in the next couple months, do that monthly pass for $39 a month. You can cancel that pass at any time. Or if you have a more long-term perspective, you think you're going to be researching for a little while, 6 months, 12 months, sign up for that annual pass and save 15% on the monthly costs on that annual pass. That's the best value here on Reventure App. So you can have access to this data every month, track the data every month, and see how the market is shifting.